Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is not going to be a look at a foreign exchange rate, but I'm going to look at a digital currency, Bitcoin, in this video. We are seeing Bitcoin come off of its new all-time high level at $73,794 and trading here today. We're currently down around $2,200 and trading just in the 70,000 to 71,000 range right now. And what are the technicals saying? What can we find any negative technicals that will allow us to define our risk, limit our risk for a potential correction, further correction in this digital currency? So let's get started. First of all, looking at the daily chart, since testing the 100-day moving average back here a few months ago, the price has since rocketed up from about around 40,000 all the way up to the 73,794 high and trading here today. That's a huge move in a short period of time. Needless to say, technically, if I put an RSI on here, stochastic is probably showing well overbought conditions, but it's probably been overbought for an extended period of time now. So that's the thing about things like RSIs, is that they, even though they can be overbought, they can continue to get more overbought, and that's hard to pick a top. So we have to find some technical level that would give us more confidence that a top is in place, and also give us a level that where we can define risk and limit risk. What do I mean by that? Well, for instance, if we were to move below the 69,000 high from 2021 right here, that would give us a level to lean against. So if break below 69,000, put a stop above the 69,000, maybe even at 70,000, and hope that the price continues to move in the downward direction if you have a bearish bias. So those types of technical tools allow us to define our risk and limit our risk on trades, and not just say, I think it's overbought, so I think we should go lower. That hasn't worked for anyone in this move to the upside in Bitcoin. Another thing you can do is take a look at lower time frame. For instance, if we go to the hourly chart, and we took a look at the hourly chart, we can define technical levels off of more closer in technical tools like moving averages on the hourly chart. For instance, when we had this move to the upside here, the price started to move to the downside, and we started to move below the 38.2% retracement and the 200-hour moving average. We saw increased momentum to the downside that took the price all the way down below the $60,000 level, also below the 50% retracement level. Now, the price should have stayed below that level, but it didn't. We started to move back above that level. And note right here, where do we base against? We based against the 200-hour moving average, and that turned the sellers to buyers, or we started to see a break to the upside, and then that momentum continued to our high price that we saw in trading here today. Now, let's take this Fibonacci retracement and look at the last leg to the upside here. And in this move to the upside, we've seen a continuation of moves to the upside, but there have been some corrections along the way. More specifically, right here, right here, right here, and right here. Each of those times, the price fell below the blue line. That blue line represents the 100-hour moving average. Now, when you break that moving average, the price should go lower. But what happened on these breaks? Well, the market fell briefly below the level here and then quickly rebounded. The market fell briefly below the moving average and then moved above that level and started to use that level as support here before moving higher. The market moved briefly below the 100-hour moving average here and then moved back above it and started its move to the upside. And now we're in our fourth break below the 100-hour moving average. Guess what? As long as the price remains below that 100-hour moving average, we can still hope for increased selling pressure. Now, if the price were to move back above that 100-hour moving average, judging from these past breaks and failed breaks, I wouldn't get in the way. In other words, I'd put my stop on a move back above the 100-hour moving average, maybe right there. And if it goes above that level, get out of this short. But if it stays below, you have the potential for the market to continue its probe to the downside, and who knows what it leads to. We did go from 40,000 to 73,000 in a short period of time, so there is room for a corrective move to the downside. Now, what would give us more confidence to the downside in Bitcoin would be a break below the 200-hour moving average. We did break below that 200-hour moving average here, but all these other moves to the breaking to the downside, did not get to and through that 200-hour moving average. So getting below the 71,048 level here, where the 200-hour moving average is found, or actually it's at $69,727. If we get below that level, that would increase the bearish bias for Bitcoin traders, and have traders then looking toward the 38.2% retracement of this last move to the upside, which takes the price down to the 68,262 level. And if we break below that level, then we'd start to look toward the 50% retracement at $66,554. Of course, also in play is $69,000 level. That was the old high price going back to 2021. So the progression goes 69,727, 69,000, 68,262, 66,554. Those would be the levels that had to get to and through to increase the bearish bias in Bitcoin. Again, the risk for any trade on this, with this, given this technicals, is a break back above the 100-hour moving average. It moves back above $71,700. I don't like it. I don't like the downside at all. So there you have it, a technical look and a little bit of a education story on how to trade something that's well overbought. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.